froze as I was getting going with the morning update. Let's waste not any more minutes. We'll start straight away. But as always, I need to stress that trading financial markets unfortunately is risky. You can lose all of your invested money as well. I'm going to conduct live technical analysis. I'm going to share with you guys levels where I think the market could bounce and decline, where I think traders are putting stop loss orders and profit target orders. But that's just my opinion. And as you probably know, I have no control over the markets. So you need to bear that in mind. And there's no recommendations either for that matter. Okay, this is the euro versus the USD. For the last few days, I said traders are probably going to be buying at 1750 for this to go to the upside. Did move up once, and then yesterday said if it goes down again, I think traders will buy again, and surely they did. The market slipped to these levels around midnight, and now the market is up with a few pip. We're looking at 47 pip. And if you're scalping, then this is really what you want to be doing, be buying down here, selling up here. Now, beyond the near term, I do think because of the short-term bullish trend, which is bullish above the June 5th low, I think the market could potentially, or should most likely, take out the last week's high and then eventually go to 119 and 119.50. So I'm bullish. I do think the market could head to the upside. I did as well last week, I think it was, share an update on the dollar index, and I do think that in general the dollar would need to give up some of its gains. So I maintain a bullish bias. If we revisit the lows, I think traders are going to be buying, and they're probably booking profits up here. And people that want to keep a position for a day or two that does not want to get involved in the short-term action, they're just buying here and hoping for this market to break and trade to the upside. What are the challenges of this outlook? Well, the challenges is that we're dealing with a corrective move, and we have still not properly tested the low yet, and that's probably going to happen at one point. And when that happens, it tends to be volatile. To give you an idea, here's the Aussie dollar. You see over here, I turned bullish. The market moved up, and then all the way back down almost to the low to test the low, and then had a strong push, and then had a decline. So this is sort of your typical corrective move where it's sort of it's quite difficult to trade. Now, in about 20 minutes time, you'll have the economic data out from the UK. I did not share with you guys this update yesterday, but if I remember correctly, already on the 7th of June, yeah, 7th and 8th of June, most likely the 7th, I did publish here in the technical analysis section my outlook on the pound. And my outlook has been to get involved around 33.60, 33.50, with the last outlook looking at 33.50. Why am I bullish above the 33.50 level? Well, because here, much like the euro dollar, we need a bit of a corrective move. The market, you can see, moved all the way down from 43.70, and if we take a fib from that very high to this very low, well, Fibonacci suggests that we could trade at least to maybe 36.46. That would be a healthy correction without sort of ruining the big picture downtrend for the pound versus the USD. So that's not the reason why I'm bullish. Again, the reason why I'm bullish is this sort of uptrend, the fact that this is heading higher, the euro is heading higher, the Aussie dollar is heading higher, the New Zealand dollar is heading higher. It's only the Canadian dollar just trading sideways, and then the dollar yen is moving upwards. But in all these other four major markets, the dollar is actually losing out. So that's why I'm bullish, and coupled with the trend here. And the numbers will be out in about 15 minutes time. And if the numbers are bad from the UK, in other words, the employment figures are unemployment figures are much higher, wage growth is not as high as anticipated, then you're probably going to see the pound softening. But my general idea that, forget about the data unless it's like really bullish or really bad, sorry. If it's really bad, then of course you probably don't want to be buying down here. And to give you an idea, if you are already long according to the setup I talked about over the last few days, well, putting a stop loss just below wouldn't be such a bad idea because you would be risking literally 10 pip. And if the numbers are really bad from the UK, then this market might revisit 133, maybe 3270. So if the numbers are terribly bad, then yeah, okay, we definitely don't want to be buying. But if they're okay, pretty much in line with expectations, then I see no reason why we should change our bias as long as you're trading above 130, 252. Now let's take a look at Bitcoin. Bitcoin fortunately turned bearish. There's not too much you can do about that. I was trading coins, Ripple, Ethereum Classic, and EOS, and I got out for a loss of about 4.5% on my crypto, sorry, on my total portfolio. And there's not too much we can do about that. The market does not want to head to the upside. And from a technical point of view, we took out this low and we're still creating these lower and lower highs. I know we're above a major low. And the problem is this, though, is that, you know, obviously, if you buy here or here or here, on the first touch, you would have been fine. But how about people that bought here or here or here or here or here or all the way down here or any other day that is not these 2 days or these 3 days? Well, they were in pain. Of course, very quick you can have a bounce. There are different strategies on dealing with the market, but historically, trading with the trend is sort of what we should be doing. Everything else, um, if you're a retail trader, is silly because we don't have PhDs sitting next to us deriving quantitative models or Python programmers or other programmers here doing some fancy code for us. Um, Sort of the best strategy, I think, is just following the trend. So if you are struggling to make money, well, I'm profitable and I trade trends. I'm not profitable each year, but I'm profitable. And if you look at the way trend followers and trend traders have been trading over the last decades, then it's a good strategy. So with that in mind, uh, the trend is bearish below $7,000, $7,800. This market could easily bounce to the upside. I just took a simple fib. You get these three fibs. You can see this is the lower level. So you can probably guess that people that should have taken the stop loss here, when the market hits the upside, they get out. As well, we can load a 4-day moving average or 5-day moving average, and it's pretty much here. So I suspect that really in this zone, the market should roll over. And if indeed rolls over, we'll have a risk of about 10% or $712. We hit the low, we can make $500. And then if we get all the way down here, you make 1,600, sorry, $1,150. So that's almost 2 times your risk. So rather bearish than bullish. If you don't want to get involved in the short side, you just feel uncomfortable, you don't like the risk reward ratio, then just wait for this break. Okay, until that happens, this is probably going to drift to the downside. Now here's crude oil, and as you can see, it looks a bit different to yesterday's outlook. Well, why? Well, because I'm starting to suspect that maybe, I mean, the easy part of being bearish is over, right? Price took out these levels, market tumbled. Then we had that corrective move. We said look to sell here, then for this to go down, and then it went up. And we said look to sell here. The market did move to the downside, then it went up again, and then it went down, and then it's up again. So we're in a short-term corrective phase right now. And my last stop loss I shared with you guys was here. So we started with the stop loss here, which we reduced to this level here. But because this market does not really want to trade to the downside, I'm cautious now, and I said, let's close out that position for a loss here of about half a dollar or 1%, like half a dollar, so 0.86%. And let's turn bearish again on a break to this level here. So this level is the 64.74 level. And on a break to the downside, we will most likely have ended this corrective phase and this market head to the downside. Now, is it possible for this market to head lower still, and just we can maintain that bearish bias? Yeah, of course. Nothing wrong with just being bearish where we are. But my gut feeling is telling me that this is probably going to try to probe the upside more, and that this stop level I shared with you first is not going to work out. I think if one would look for such a move, then probably stalling to sell at 67.39 with a stop on the other side is probably a better idea than you being short from these levels down here. Now here's gold, and as you know, I've been bearish gold for a very long time. And again, here, not again, but well, actually, yes, again, I'm sort of getting fed up with the waiting. So the trend remains bearish below this level, which is 1,308 or 1,307-ish. And as you know, this was the last sort of stop. The entry was here, so we're up with about $3. So it's not a lot. But this market does not want to trade to the downside right now. It's just trading sideways. Again, technically the trend is bearish, so there's no point to be a hero here and trying to do anything else like going long. The market could easily be trading down here. But the way to trade this in an effective manner and in a manner where we use our capital effectively, then a break to the downside here is what I'm looking. If we trade below here, trader's probably going to sell again for a risk of about 1.24%. If we go all the way down to support, which is the October 17th low, we can potentially make 1.91% return. So we're getting a little bit more than we're risking, and that's what I'm looking for. What you want to see is a break during trading hours, normal trading hours in London. And if there's a break outside of London hours, there has to be a good reason for it. And when it breaks, it should quickly go into profit. Now, this is the German DAX, and you're just gonna be in trouble if you try to trade this, I think. The market today tried to push to the upside, but there's really no, if any, momentum in this market. Um, there's really no point doing anything here right now with this market, okay? Instead, as I've been suggesting lately, trading like, to see here, Twitter is where I want to go. Trading something like stock markets is better than doing other stuff. To give you an idea, here is how I bought. Here's the S&P 500, which is an idea I shared with you guys here. I bought a bit here. I actually bought quite a bit here. And up here, I bought a little bit less, about 50% of this position. I'm a bit, maybe I got too enthusiastic here and bought at the wrong time, but the fact that I'm holding a nice position and you can see the stop loss is pretty much at entry, forced me. So even if this goes down to the middle, sort of my average entry is still going to be down here. So in worst case, this is probably going to be a bit of a loss, but half of the loss really that I had initially. And if it goes down to the middle, I can always just say, you know what, let's pull the plug on this thing. I don't want to be holding on this any longer. Maybe the S&P would have been better if it pulled back a bit and I would have bought. Um, I'm gonna wait and see what happens. I think if we take out these highs here from, I think these are the March high, this should open up for further push to the upside. And my profit target levels are right now at the 2018 high. And right now, the bears, people, the doomsayers, they've been very, very negative, gone quiet. Um, but it's not that they have sort of giving up yet. So I want to see more capitalization, more than giving up the review really. And then maybe when they turn bullish up here, maybe that will be the time to get out. But I think we'll most likely take out these highs. I'm quite confident about that, and then push a little bit higher. The question is if we're going to go up without having a big correction. Another market that I'm holding a substantial position on is the Russell 2000. Here as well, this is a 4-hour chart, and market went up and then it pulled back, and my entries here, stop loss is pretty much exactly here. And this market, when I took the snapshot yesterday, was up with 2.35%, and I think we can go up to 1750. And in general, where most of the action is right now is what I can see is in stock markets. Uh, and then the other section would be shorting crypto coins. That might be like unfamiliar to most of you guys, but to give you an idea, you have Monero. This is Monero, and You can see here on this daily chart, actually, let's make it a log. So this is a log chart. So you can see that, yeah, okay, shorting right now at these levels is probably not a good idea because of these two candles. But if Monero took out this level here already on May 28th, and if this market just swings up to maybe, you know, 145, sorry, yeah, 145, 150, I think traders will try to sell here. And I think stops are going to go on the other side. And so you risk 15%. And if it goes down to support, you make 29. So that's 2 times your risk. I think even you have Litecoin. Litecoin is at an extremely fragile state. Also had a bearish breakout yesterday. And imagine everybody that bought here, or anybody that bought from here all the way up, is not losing money. And it's just some people here that bought that are not losing money. And of course, if you go back, people that bought in August, sorry, December. But everybody else is losing money right now. So here as well, you know, it might go up a bit. Sort of corrective reaction. Risk is 13, and you know, if it goes to the downside, 21. So here's it's clear as whatever you want to call it, but there's no ambiguity here. It is definitely in a downtrend. When you look at things like uh, gold, well, it's just being choppy. If you're looking at gold, well, crude oil, yeah, it's going up a bit, so it's a bit difficult. And yeah, euro is going up. Of course, it's going up, and you can scalp that, do whatever. But you need to bear in mind that it's a corrective move, and it's much harder to trade than just going with the trend. If you sort of unfamiliar with cryptocurrencies, then I suggest you check out, let's see here, Trade Captain. On Trade Captain, you can click on the link up here. There are CFD brokers that have started to introduce cryptocurrencies. So Amana Capital are one of those, which means that you don't have to trade via an exchange. The exchanges that are available right now are unregulated. That means that they're not governed by anyone. So you lose your money, well, you can't really go back and tell the regulator, hey, they lost my money in a hack. They need to pay back. There's zero security, zero insight, zero transparency. But what a company like Amana Capital does, which is regulated by the FCA, is that they do the deals with these exchanges. They do deals with other FCA regulated entities. In this case, I do know that they're working with other regulated entities. So you have protection at the level of Amana, and then you have protection at the level of the liquidity providers. What does this mean? That means that, for example, if your money or the broker or people get hacked, Amana still has some sort of obligation to help out and pay back whatever is lost. Um, and then that's really important when working with the FCA regulated brokers. So you can access these markets with a broker like Amana Capital. Okay, we're gonna wrap things up. So I want to thank you so much for joining me. And it doesn't look like I have any questions. So I want to thank you so much for joining me. In about 2 minutes time, the data is out from, actually, let's take a look at the data together. It's just 2 minutes left, so we can do it. So we have employment data out from the UK in literally 2 minutes time. Um, Unemployment rate 4.2%. Our average early average earnings, including bonuses, 2.6 and 2.9. The data is what we're looking at. Better numbers than expected should cost the pound to gain, and vice versa. You have the claimant count change and the claimant count, but people don't focus too much on these. Um, Positive numbers is bad. Okay, it's actually data should be out in about 1 minute. Let's take a look at the pound. Let's go on Twitter as well. It's about 30 seconds left until the data's out. Don't forget to like the video. So if you wonder what I'm doing, I'm just waiting for the numbers to be out. Okay, so the numbers should be out right now. Okay, so lower average hourly earnings, that's not good. The unemployment rate as anticipated. And you have the claim account change, negative 7.7. So this number is slightly better than expected. And the prior numbers was revised as well. But you have average earnings including bonuses at 2.9. So this would be a bit of a disappointment. Is it bad data? No. Is it good data? It's okay. Does it matter? Probably not. So with that, we're going to conclude today's market update. The data was slightly disappointing, but as long as you trade above the June 1st low, there's no worries on my end. Um, is it going to be easy trading? No, but I think as long as you trade above June 1st, people will still be buying down here, working this corrective move in the market. The pound is bullish, the euro is bullish today, the Aussie dollar is slightly bullish, the New Zealand dollar is bullish. So it's more about selling dollars than anything else today. Cool guys, have a good day. Catch me tomorrow at 9 a.m. London time. Click on live training room and click here, and then you load the video, and then please like it. You click here. Thanks guys.